Hello and welcome to the day ahead. It is Friday the 13th of May. I'm Andrew Gagan. Well, let's take a look at the markets. Global contagion continues with world stocks slammed, hitting 1.5-year lows, edging ever closer to being down 20% year to date as the bears take over and fears mount of a hard landing for the world economy. The near 20% drop in the MSCI's World Stocks Index since January is its worst start to a year on record. The main Pan-Asia Pacific closing at a 22-month low with red across the region. Further stoking tensions overnight, Finland confirming it would apply to join NATO without delay in the wake of Russia's invasion of Ukraine. Well, to Wall Street, another whipsaw session with equities again ending sharply lower as Fed rate hike worries continue to take hold. The tech-heavy Nasdaq managed to eke out a modest gain, but remains down nearly 8% this month alone and more than 25% since the beginning of the year. The S&P 500 managed to pull back some losses towards the end of the session, but it's still close to entering a bear market, down more than 18% off its highs of early January. Well, on the inflation front, PPI data is showing a sharp deceleration in April, thanks in part to a steep drop in energy products. Annually, producer prices are up 11%, down slightly on March's record surge, but did little to soothe investor fears of rising interest rates. And while the numbers were broadly in line to marginally better than estimates, overall fear is in the air. CNN's Fear Greed Index sitting at one of the lowest levels seen in recent memory, now at 4. To Treasury markets, and the curve continues to flatten as investors brace for near-term hikes to hurt long-run growth. The benchmark 10-year Treasury yield dropping to 2.82% from more than 3% at the beginning of the week, while Germany's 10-year yield, the benchmark for Europe, falling as much as 15 basis points to 0.85% to its lowest in nearly 2 weeks. Well, a closer look at the latest inflation figures show that core index PPI, which excludes food and energy, rose by 0.4% in April to be 8.8% higher on a year ago, slightly below estimates. And in other economic data, weekly initial jobless claims in the US rose to their highest level in 3 months to more than 200,000. The former Fed chair, US Treasury Secretary Janet Yellen, says the central bank can bring down inflation without causing a recession because of a strong US jobs market and household balance sheets, low debt costs, and a strong banking sector. And the US Senate continues to place its trust in current Fed chair Jerome Powell, voting overwhelmingly to give him a second term. This, as he said, the Fed's battle to control inflation would include some pain, but that the worst outcome would be for prices to continue speeding ahead. And he reiterated his expectation that the Fed will raise interest rates by 0.5 percentage point at each of its next 2 policy meetings. Meanwhile, global investors continue to bid up the US dollar as they seek a safe haven on concern of slowing global growth amid central bank tightening. The greenback climbing to a fresh 20-year high. The Aussie dollar falling from highs near 69 US cents. And the Japanese yen, it did firm overnight. And in cryptocurrencies, relative calm has returned after the collapse of stablecoin Terra USD triggered panic selling. Bitcoin trading above $28,000 after having plummeted to just around $25,400, which was its lowest level since December 2020. And Ethereum remains below $2,000. All right, let's take a look locally. Some relief from selling may be in store for the Australian share market this morning, with SPI futures relatively flat to negative, and growing fears of a global slowdown continue to drag on commodity prices. The iron ore futures price falling 3% to $130 a tonne after China property developer Sunac Holdings defaulted on a dollar bond. Base metal prices were mostly lower, tin falling more than 5.5%, zinc and copper also tumbling, and the gold futures price falling more than 1.5% to $1,824 an ounce. Oil prices were largely flat despite the latest data revealing fuel inventories have fallen to critical levels, while there's little progress in the EU's plan to embargo Russian crude. And that is your day ahead. See you again Monday.